Hello everyone, it's Dale here with a new weekly trading ideas video. Before we start with the trading ideas, just a quick note about a sale which started today. If you go to my website, which is trader-dale.com, and click this button, then it will take you right to the page where you can get the special sale. And here on this page, you can get my best educational and indicator packs massively discounted. You can get the volume profile pack, which was previously called the elite pack, but I changed the name, but the content is the same. You can currently get it for $3.97. Then there is the order flow pack, which will teach you everything about order flow trading. You can get that as well for a discounted price of $3.97. And there's the investing pack, also discounted to $3.97. And the investing pack will teach you everything that you need to know about long-term investing. Now here is the special deal. If you scroll down a bit, then you can get all the three packs, everything they include. That's the video courses, indicators, support, just everything, all together for $5.97. All those three packs. So that's the huge deal. And if you want to learn more in detail what those packs include, then there are videos which you can watch and I'll show you in detail. Alright, so that's about that special sale I'm currently running. Now let me go to the charts and let's talk about the trading ideas. So let's start with euro dollar. You are looking at a 30-minute chart of the euro dollar on NinjaTrader 8 platform, and I want to show you this support which formed at 1.0748. It is based on a volume profile setup which is called the rejection setup, and for this setup you need to see a strong rejection like this. This is a rejection of lower prices where the price was dropping sharply and then suddenly turned and went into a sharp uptrend. Now you need to see a heavy volume zone, a volume cluster, somewhere around the place where the price turned, somewhere around this place. And this is it. This is the volume cluster, and this is the beginning of that heavy volume cluster. Alright, so this is the place where buyers started to buy aggressively and turned the price from selling activity into strong buying activity. So when there's a pullback to this level, chances are that there'll be a reaction as the buyers from here are likely to defend this place and push the price upwards from there again. Alright, so that's the rejection setup on the euro dollar. Now let me switch over to a next trading idea, and it will be on the crude oil. So this is the crude oil futures. Again, a 30-minute time frame, and in here there is a nice volume accumulation setup, one of my favorite volume profile setups. Let's first look at the weekly profile, this one. This is how the volumes were distributed throughout the whole previous week, throughout this whole period, right? Heaviest volumes were right here. As you can see, I have a level here. This is a support at 74.0, and this support is at the beginning of this massive heavy volume zone. As you can see from those heavy volumes which were accumulated here, there was very aggressive buying activity, strong uptrend. This is telling us that buyers were accumulating the long positions. We can see that on the volume profile, those heavy volumes here, and then they pushed the price upwards aggressively. But they placed most of their longs in here. This is the beginning of that heavy volume zone. So when there's a pullback, chances are that those buyers will become active again and they'll want to push the price upwards again. Right? So what I like about this is the heavy volumes weekly point of control being in here, and also this strong buying activity that started from the weekly point of control. Those are the things why I selected this level. What we need to do now is just wait for pullback to this level and go long from there. All right, so that's for the crude oil. And let me now switch over to another trading idea. The next one will be on the Australian dollar, Japanese yen. So this is the Australian dollar, Japanese yen, a 30-minute time frame. And the level which I have here, this support at 96.63, is based on a similar idea as the crude oil. Again, if you look at the weekly volume profile here, then there's a weekly point of control, and this heavy volume zone where the weekly point of control got formed is this one. This is the beginning of that heavy volume zone. This is where we have that level. You can also see it if you use the flexible volume profile like this, even like this. It will always point to this heavy volume zone. This is the level. All right, so the logic is the same as with the crude oil. We have heavy volumes accumulated before strong buying activity, which is telling us that buyers were active here, building up their long positions. Then those buyers pushed the price aggressively upwards. I really like this aggressive start, by the way. And then when there is a pullback, chances are that those buyers will want to defend this place because it's clearly important for them and push the price upwards from there again. All right, so that's the volume accumulation setup based on the weekly point of control. Now, it doesn't need to be based on a weekly point of control. That's something extra, that there's a weekly point of control here. But the only thing which you need with the volume accumulation setup is heavy volume zone. Doesn't need to be weekly point of control from which strong trend activity starts. All right. Then if there's a pullback, take it from there. Now, I was considering one more thing here. And if you look at the trend, heavy volumes were accumulated within the trend. So I was thinking about long from here. To me, it looks like a bit risky trade, but if you want to take it, then it is at 97. What I like about this is that the price was reacting to this level in the past. So it was a resistance. Now it's turned into a support. Previous week, there was that first deviation here, first deviation of VWAP, ended the calculation in here at that level. So that also adds strength to the level. Now, why I'm saying that it looks a bit risky is that I think that stop loss orders are below those lows, and this is something which I call the stop loss cluster. And if the price makes it to this level, maybe the big guys will want to take that liquidity of those stop loss orders and boom, just shoot past that zone. So this could be a bit risky, but still, if you want to take it, not bad idea for a long trade, I think. All right, so that's about that. That's about the trading ideas. Now, before I wrap the video up, I would like to announce a winner of a contest we had last time. The prize of a contest were my custom-made indicators for TradingView platform. And right now on your screen, you see the name of the person who won in the contest. So congratulations to the winner. And what I'll do next is I'll do another contest for the next week. The only thing that you need to do to participate is leave a comment below this video, which I'll upload on YouTube. And next week, I'll randomly pick one person to win those set of indicators. All right, so that's about that. Thanks for watching the video, and I'll be looking forward to seeing you next time, and until then, happy trading.